Good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we are continuing to work with the Bill Williams Market Facilitation Index along with the ATR. And here, this is a technical description of the MFI. I hope you are well familiar by now. And comes the ATR. Along with that, we also use the min-max for optimizing purpose. Before we get started for the day, here is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for maybe even for many years, many months, or at least some years, like 4 or 5 years, or whatever you think fit. And last but not the least, nothing in the webinar is to be constructed as an advice to trade or for any particular trading setup. With that, we get started for the day. Here I would explain to you. Yesterday we finished, means almost finished the buy side. So today the focus is going to be on the sell side. So I will explain to you the example on the sell side what we are trying to achieve in today's session. We want the short sell position to be taken when the maxima is falling and the minima is falling on the hourly chart for 30 hours time frame, and then we need the momentum to be picking up on the BWMFI. So this kind of situation where the MFI is up, volume is up, while at the same time price the price momentum is going down, that is the candle closing is less than the candle opening, then we look for a sell trade. But one more condition needs to be confirmed, and that is this ATR variance. We want the ATR to be at least 20% less than the ATR 12 hours back, and the reason is that we want the consolidation to have happened. Because of that, the ATR has declined, that is the volatility has gone down because of the consolidation phase, and when the MFI is picking up, the volume is picking up, means the fresh momentum is likely and the trend is also on our side. Then the next question is where should the entry be, and for that we are utilizing the 5 hours minima maxima conditions, and we are also taking the ATR help for exactly pinpointing the entry and exit. So we will be taking the 50% of the hourly ATR, and then we will be deducting that from the maximum of last 5 hours, and we will place the order there provided the last tick value is at least 60% of the ATR is less than the 60% of the ATR from the maxima, so that it will be a limit order and the system won't malfunction. So that is the precaution only. So let's get to our Visual J Forex platform and let's see what we have done so far. We were almost done with the buy side. So this is a standard instrument subscription. The default instrument is €, the position amount defined at 0. Then we got this Bill Williams Facilitation Index and min-max, 4 blocks of min-max each, 1 hour time frame. We got the historical candle to look at the price action of last 1 hour. We got the ATR to different to compare the ATR values at the different point in time, that is for last 1 hour and then 12 hours back, 12. Then we got these min-max of 10 minutes each for 30 time period, that is 300 minutes data is equals to 5 hours as I said. And then we did see some calculations. Here we have defined the ATR difference, and then we got this sell entry point defined as well. Then we defined this buy entry condition, the buy trade condition, and we got these historical candles to act as a trigger point whenever the price starts to fall or rise beyond the last hour's closing value. it will generate a trigger provided the rest of the conditions are fulfilled. And this is a buy entry point. This is the pending open which we will fill up today. We want to define the stop loss and the target price level, and then the order validity as well. So we will need to do 3 calculations, and then we will be almost done with our buy side, and we will be free to work on the sell side. Here, as you can see, the MFI should be up, volume should be up, that is beyond above zero. And as I had said earlier as well, the only one value, only one output from the BWMFI is above zero. So if it is above zero, rest of the 3 outputs are equals to zero. So, and if any of other output is above zero, then that will mean that this MFI up volume of output is equals to zero. So this is the condition. And then the last hour should have closed in green with gains. The maxima should be rising, the minima should be rising. Then the ATR difference should be, it should be less than at least by at least 20% of the ATR of 12 hours back. Then the last tick value should be above at least 60% of the ATR of hourly time frame from the minima. And then this minima 5 hours minima should be less than the minimum 5 hours back. That means during the consolidation correction has also happened, and we are pretty much safe for going for a fresh trade. And then there is a trigger point for the trade. So in today's session we will need to bring in 3 calculation expressions. First we fill up these requirements of the stop loss, the take profit, and the order validity condition. So let's do that. Three calculation expressions straight away. And as you might be aware, if you have seen the earlier sessions, we will need to do the type conversion as well, as most of the earlier values were in double data type. Now this is going to be needed in integer type, and this is also integer, and then this is in the long format, and because of that we need to do the type conversion. And first thing we do is we connect the flow, and then we define the target price. And as I had said in the yesterday's session, we can do it like simple 1:2 ratio with hourly ATR being equal to the stop loss level, and the twice of the ATR being equal to the target price, or you can do it like 2.5. So either way, whatever fits your purpose. For the today's session, we will utilize 1:2.5 ratio. So our target price would be equal to the 2.5 times of the hourly ATR. So we take the hourly ATR value of last hour, and we create a fresh variable. Now create a new variable, and okay, double is fine here, as we are going to need the target price pips, and it would be 2.5. so it will be used to multiply the ATR. Okay, so here we got this. Now one thing is we want the result to be in the integer format. And if you consider the Euro USD, it is this last four decimal point indicates the pip, and one pip is after the four decimal points. Now if we want to bring it in the integer format, we need to multiply it with a value with uh, 10 to the power 4, and that is 10,000 10k. So we need to do that. Here we need to create a fresh variable, create a new variable, and it will be the pips condition pc, and it will be equal to 10,000. It is 1 followed by 4 0. So here we go, and now we need to do the calculation a1 into a2 into a3. All right, and this will be the target price. So here we create a variable, and as you can see the type is integer. We name it as tp. Start value is not going to be defined. We save it, and its value will be the result of the calculation. Okay, now we need to do the similar thing for the stop loss, and that is again taking the ATR value, multiplying it by I think if we simply multiply it by 10,000, it will be good enough, as we are keeping the value equal to the hourly ATR. So if you want to make any changes, suppose if you want to use 1.5 times of the ATR, you simply multiply it by 1.5, so that will do the job. Otherwise you simply multiply the ATR value by this pip condition 10,000, and we will get a result in integer format, and it will be now a1 into a2. So here again result of the calculation needs to be defined in integer, as we are looking for the value in integer type. So it will be SL, value will be the result of the calculation. Now comes the question of defining the order validity. So what should be the time frame for which the order would be valid? Now it kind of depends on observation. So what works for one time may not work another time, but I think 2 hours should be good enough. So suppose if you want to use any other time frame, you simply have to change the multiple, and I will show you, so it's not that difficult. If you wish to keep it for 3 hours, if you wish to keep it for 1 hour, you can do it either way. So now we need to take the last tick time and add it. Last tick time. Okay. Okay, we got it. And to that we create a new variable, and it will be tick td. Start value would be 3.6 million. So count the zeros well. If you make a mistake here, it will change the whole complexion of the algorithm. So we need to make sure that we are getting the zeros right, and the value is 3.6 million ticks. Yes, it looks good to me. Let's save it. And now to make it 2 hours, these 3.6 million ticks are for 1 hour. So if you want to keep it for 2 hours, then you need to multiply it by 2. If you want to keep it for 3 hours, you need to multiply it by 3 OV. And as we are keeping it for 2, so here it goes. And the result would need it to be A1 plus A2 into A3. So that is last tick time plus A2 into A3. And we need to do the type conversion. Here go till time, we can name it as order validated time, type is date and time. Okay, so we got this placed here. So it is almost, for the time being we can connect this flow here. It is looking good to me. Now we need to turn our attention to the sell side, and we needed the candle 50 is closing to be greater than the candle 35. Candle 50 is a 1 minute candle, and candle 35 is the last hourly candle, and whenever the price starts to rise beyond that, we want new trade to be placed. Just to be sure, we will check it once again. So let's see where is the candle 50 and where is the candle 35. So the candle 50 is here, and as I said, we need it to be greater, its closing level to be greater than the candle 35 closing level. So as it seems, we have done perfectly fine. Yes. Now starting to work on the sell side. We have 10 minutes left, so I don't really think we will be able to finish this session in today. Finish this setup in today's session. Still, let us see what we can do. This is maximum of 5 hours condition. We want it to be rising. That means the correction has happened. Okay, now we need to take a couple of more blocks. Oof. So we go back to our indicators. So here comes the BWMFI. We want the MFI to be going up and the volume to be going up. That means the value needs to be above 0. And then the second requirement is that we want the minima and the maxima to be falling. We need bit side low price. Yes, this is the right one. We want the current minimum value of the bit side on the low price to be less than the minimum value 24 hours back. So we take this minimum value and compare it to the minimum value 24 hours back, and we want it to be less than the prior value. So it should be up means greater than 0. It should be falling means minima is going down and the maxima is going down, means the trend is on the downside. We need further condition for defining the maxima, and that is the maxima of the high price on the ask side. We will need to compare. Okay, this is ask side high price, and it should also be falling. So here we need it to be falling. Now we need to move on to the next requirement, and that is the ATR condition. ATR and also the historical candle thing. The candle 35's closing level should be less than the opening price. Candle 35, we take the values from this section, and auto created variable, we need candle 35's data. Candle 35 is here, and its closing level should be less than the opening level. Okay, we need to take one more block and connect this. The closing should be less than the opening. Let us connect this to the prior blocks which we have defined, and these are here. The maxima also needs to be falling. Now we need to look at the last 1 hour's ATR data and compare it to the 80% of the ATR 12 hours back, and that is the ATR value which we are going to get in these calculations which we have done so far. So let me see which one is the value which we need to compare with the line 21 and line 22 into ATRV. Let me see ATRV. What is the value of the ATRV? ATRV is 0.8. That means this is the requirement. The line 22 should be less than the ATR difference, or you can say even deviation. ATR 1, line 21, and now comes another block. Here we have defined There is a sell entry point by deducting from the maxima the 50% of the ATR, and this line 21 needs to be less than the 80% of the prior ATR. Okay, so we need to now look at the last tick price, and for that we need to take the if block and look for the last tick price, and for a sell trade the tick ask needs to be at least 60% away, 60% of the ATR less than the maxima of 5 hours. And that calculation we have done somewhere. Let us find where we have done that calculation, and that calculation is somewhere here. What we have done, we have maxima and the minima. I think we haven't really done the calculation, I guess, because we need to look into. So here we will need to do further calculation for defining the buy the sale point. So let us do that calculation as well, and for that we need to take one more calculation expression and take this value, which is 82. 82 is 60% of the ATR. Yes. So the 60% of the ATR needs to be added to the 60% of the ATR needs to be deducted from the 5 hours maxima. So first we need to take the current maxima of 5 hours of the ask side of the high price. This is low price. We need ask side high price. Okay, we got it, and it should be maxima 23. Now from maxima 23 we need to deduct the 60% of the ATR value. And that would be this maxima A1 minus A2, and we get the sell condition SC so here we connect this and then connect the flow again, and we want the last tick ask to be less than this calculation which we have done just now. Let me see if I added the same condition of the last tick bid to be greater than the buy condition. Yes, tick ask will need to be less than the 60% from the ATR. Now we need to define the trigger point. For that we are going to need two A blocks, and let us also take these all the blocks where they belong. And here we arrange this. Oh, that's fine. So this is the condition. Now we join the flow here. The 5 hours maxima should have been greater than the maximum 5 hours max. That means it is indicative of the correction phase. So we get this here. We now have to keep and then the trigger point. Trigger point is going to be the 10, not 10, only 1. Trigger point is going to be the 1 minute candle closing levels compared to the last 1 hour's hourly candles closing value. And for that we are headed back to the candle 49 and candle 50's closing levels. So here we auto created variable. Candle 49 is the candle 2 minutes back, and its close should have been greater than the candle 35 closing level. It should be greater. Then candle 50. Again here let us take this closing level of candle 35, which is the hourly and here we got the candle 50's closing level. Okay. So this is almost done on the sell side. Last tick ask should be less than the sell condition as we have defined already. Then comes the pending open for the sell trade, and it is going to be sell limit. Okay, and the sell limit means the price will need to be taken from the calculation which we have done. 0.1 million is good enough, slippage 2 pips good enough, stop loss, target price and order validity time and sell point all needs to be taken from the results of the calculation expression. So here we now take the sell entry and here we get the sell entry which is maxima of 5 hours which needs to be deducted by the 50% of the hourly ATR, and then we get this variable stop loss, the take profit, and the order validity time. So as we can see, we are almost done, and let us see how the test performs. We can test it for a week or day depending on what kind of trading response, trading speed it displays. So the candle closing level to be less than the candle 50 closing level. So this is the setup for our algorithm which we have finished in today's session. So let us save the file. And we export it in Java format. Okay. Take So we have saved the file, and now we import the same file on this Visual JForce platform, and we try to run it for testing on the last week. And that file is in the folder of tech algorithms for the month of May, and here we go. First thing, you need to compile it. So we have compiled it. We will not test it for too much time as the audio quality goes down and not many people would be able to hear me. So we don't do that. Okay, so let me see compilation. Oh, it hasn't really been compiled. Okay, compilation successful. Now let us test it. I would recommend that you do extensive testing. Here we are not going to be able to do that simply because there is only finite time we have and the session is also drawing to a close. Even in today's session I have taken almost 10 minutes extra. So previous week, and here not many changes, and we run it. So the test is fast enough, but we don't really know if we will get any trade or not. But as you can see, the algorithm is working just fine, and now the testing is up to you. The code is looking good as it got successfully compiled, and also the algorithm started running the test as well. So that's it from my side for today's session. If you have any query or any idea to share, you can write it in the comment section and I would be more than happy to take the discussion forward. We will be back tomorrow with a fresh setup. See you tomorrow. Goodbye.